Hello and welcome to the Investing Bros. I am T Shroom all day, and every day this week I will also be T Shroom. Thank you so much for tuning in. Bank failures. Bank failures are in the headlines, and we haven't seen them yet, but there are some very intelligent analysts that are forecasting what could potentially be another huge wave of bank failures. Let's go ahead and go to the Wikipedia page before we get to the CNBC headline. These are a list of the largest bank failures in U.S. history. Right. So the first one you can see, Washington Mutual. This was still the biggest one of 300 billion in 2008. Right. But then the next biggest by nominal assets were all 2023, which I'm old enough to remember was last year, right? And that was First Republic, Silicon Valley, and Signature Bank. So with what we're about to read, you might be thinking, oh, these banks aren't going to actually go under. They're not going to get custodied by the government, and their assets aren't going to get chopped up and sold to the highest bidder. No, it will happen, because it literally happened 3 times last year. The biggest by nominal assets of failure, as you just saw on this Wikipedia page, it's right here. You can't deny this. This isn't, I didn't go in and bribe the Wikipedia editors to change this. This is real data, right? Other than the very top one, which is 307 billion, right? You have the next 3, all 2023. So let's get into it. Let's get into this article here. Why hundreds of U.S. banks may be at risk of failure. Notice I don't have anything highlighted because pretty much everything in this article is important. Hundreds of small and regional banks across the U.S. are feeling stressed. They're feeling stressed, bros. Are you feeling stressed? Let me know in the chat. How are you feeling this morning? Are you feeling stressed? Are you feeling blessed? You could see more banks either fail or at least, dip below their minimal capital requirements. Christopher Wolf, managing director and head of North America banks at Fitch Ratings, told CNBC. So Fitch, you can kind of think about like Moody's, like the Standard & Poor rating department. That's Fitch. Consulting firm Claros Group analyzed around 4,000 U.S. banks and found that 282 banks face the dual threat of commercial real estate loans and potential losses tied to higher interest rates. Okay? So they have the interest rate threat, which, as we heard from Jerome Powell on the 1st, that rate's not changing. It's not changing this month, and it's unlikely, unless the inflation data just completely cools off and gets back to 2%. Those rates are likely not coming off 5.5%, right? So that variable is fixed. That's not changing. Commercial real estate loans, that's not something we talk about here in the Investing Bros very much. But the commercial real estate, if you talk to people in the industry of commercial real estate, they'll tell you that they're not in decline. They're in a depression. The commercial real estate market is in a depression right now. There was I didn't bring this up because I'm just coming to my mind now, but there was a property out in San Francisco that I saw it sold for 80% loss of what it had sold for before. It's a depression, folks. And this is one of those unique moments where the economic decline is actually hitting the rich first. And I say the rich because it's not a bunch of retail investors that own commercial real estate. There's some, right? But it's mostly pretty rich groups, investment firms, right? But the supply and demand of office buildings in other commercial real estate is just undeniable. They couldn't have foreseen when they were making investments back in maybe as far back as like the 90s in these commercial real estate properties that there would be a pandemic, and then the internet would make it to where people don't have to go to these commercial buildings anymore. It's kind of crazy to me that people still even go to commercial buildings. It has to do a lot with productivity of workforce. Believe it or not, when you have access to video games, you don't get much done at home, apparently. Let's keep going here. Get back on track. This is the number to watch here, 282. This is a significant number because this would represent, if we had just 3 last year that went down, call it 4, 5, 550 billion ish. It's a little bit less than that. 550 billion went down, and that was just 3 banks. Imagine how much it would be if 282 banks went down and had to be recustodied and divvied up to Wall Street, right? That would be a lot. The majority of these banks are smaller lenders with less than 10 billion in assets, so that's good. Most of these banks aren't insolvent or even close to insolvent. They're just stressed, Brian Graham, co-founder and partner of Claros Group, told CNBC. That means there'll be fewer bank failures, but it doesn't mean that communities and customers don't get hurt by that stress. Graham noted that communities would likely be affected in ways that are more subtle than closures or failures, but by the banks choosing not to invest in such things as new branches, technological innovation, or staff. For individuals, the consequences of small bank failures are more indirect. Directly is no consequence if they're below the insured deposit limit, which are quite high now at $250,000. Sheila Barr, former chair of the U.S. Federal Department Issuance Corporation, you might recognize that acronym, FDIC, told CNBC. If a failing bank is insured by the FDIC, all depositors will be paid up to at least $250,000 per depositor per FDIC insured bank per ownership category. So this is the information that we're given today, basically handed down from these analysts here at Claros Group. And they've surveyed about 4,000, not surveyed, they'd analyzed 4,000 U.S. banks, finding that almost 300 of those banks face this dual threat of exposure to commercial real estate assets, whether that be direct exposure or through potential ETF type instruments, and then obviously the higher interest rates. And the higher interest rates, I will note, that was the threat that took down, I believe, these three: First Republic, Silicon, and Signature Bank. They just couldn't hold their business model was no longer profitable, and they were starting to take on water onto the ship because those interest rates were elevated. And has that changed? No, right? So it's very likely, in my opinion, that we will definitely be seeing stressed banks in the United States, but we may even see more failures in 2024. So the one that we didn't see here is Republic First Bank, which will be added to this list. It looks like the good folks at Wikipedia have not updated this list quite yet. Let's see if it's just by, doing it by year. They still haven't added it up. So that'll be added as well. All right, let's move on to some other stories. But before we do, let's look at chat, and let's also take a look at the Bitcoin charts. Let's see who we're going. Kyle Field says it only takes $50 million to start a bank. That's an interesting factoid. Billy Goat Tales on Twitter Spaces tonight, 9 p.m. Eastern Standard, with guest host Crypto Crow. That sounds good. Business, motivation, crypto, and investing. Y'all definitely be tuning in. I've been tuning in. I think I've made it to the last 4 of these Billy Goat Tales, and they're a lot of fun for sure. It's just over there on X. It's not video. It's just audio, kind of like a big group call, and everybody has a really good time. Sunday Kayel said, T-Shroom, I love your voice. Well, that's very nice, Sunday. I like that name. I've never heard that as a name before, Sunday, but here we are, having fun. Let's see what else we got going on here. Redman saying Crux, Ola, shouting out to Big Crux who said GM. Gotta love it. French Toaster said, when's single-family homes going to be affordable? Well, it'll be affordable to you if you keep hodling Bitcoin. Probably around the fall of 2025, buying a home will not be as big of an issue. I vote T-Shroom to be the walking, talking wiki, said Blackie Chan. I like it. I think that's a lot of responsibility. Because I couldn't tell you about the origin of the toothbrush, right? Wikipedia could. I couldn't tell you about, who invented the M2 chip or even the M3 chip over at Apple, right? I'm sure that's on Wikipedia. All right. Kyle Field said, a lot of that is more driven from occupancy issues, though. Absolutely. Absolutely it is. And those are the two issues, right? People not valuing commercial office space anymore. People not, needing commercial real estate anymore. And that's going to. I've actually looked into this pretty intensely. It's actually not so much an issue for. I want to say it's like 70 to 80% of the country, but there's a 20 to 30% of the country that does have a lot of distressed commercial real estate, meaning that it could potentially sell for more, probably around 50% of its last sale price. And that's not good, because those losses can trickle into the economy. T Shroom just editing the wiki himself. No, I'm definitely not doing that. I've never actually edited a Wikipedia page. I know that you can, but they have like a process for doing that. Doing on a scale of 1 to 10, 10 being deserving, I am an 11. Nice. So better than you deserve, Sativio Shimoto. I like to see it. I like to see it. All right, Victor Nelson here with a thick banger said, this commercial real estate issue is only going to get worse as the average company is still trying to downsize in their physical footprint, especially when the average lease is like 10 years. Yeah, absolutely. I mean, for me, commercial real estate is a very scary industry to be in if you're in that 20% of the country where it's basically a depression in that industry, in that market of commercial real estate. Again, the rest, you might be listening to me and you're a commercial real estate agent, right? And you're like, T-Shroom, it is not, I'm fine. I'm making money, I'm putting food on the table, and I'm putting money in the savings. And I'm buying Bitcoin, baby. And that means you're probably in the majority of the country where there is not an issue with commercial real estate. But like I've said, there is a significant chunk, 20 to 30% of the country that, and these are going to be the bigger cities where they overbuilt, right? Or they built adequately, appropriately for the time. They developed for what they thought was going to be demand for commercial real estate, and that has been a significant overcalculation because of the work from home movement. The remote worker has completely was unprecedented, and they didn't know what to do. And so now all of that real estate that's fitted for commercial, in my opinion, should be fitted for residential. Just retool it. Oh, but that's going to be tens of millions of dollars. Yes, it is. But, I mean, it's either that or you sell it for a 50% loss onto the market, right? So I have a lot more thoughts on commercial real estate, bros. If you want to, we're not going to talk about it too much more here, but if you want to get more in on that, become a bro in the YouTube system here. You can do that easily by just clicking this join button here on the channel. It should be on the video just below as well, right by our subscriber count, which is about to tick into 16,000 thanks to you all as well. But you can join that YouTube membership and you get access to the Discord, where on Wednesday, today, Wednesday, after our 3 p.m. live show, we go live in the Discord, and that's for members only. There's usually, less than 30 people that come in there, so you will have a chance to actually chat. We'll be able to hear your voice, hear your questions about commercial real estate, and we can dive deeper if that's what you want to talk about. So you hit the join button, you pick a tranche that you want to be a member starting at $4.99 a month, right? And then you get access to the Discord, and you can come chat us up and get our opinions on whatever you want to talk about. Commercial real estate, commodities, what kind of dog you should get your daughter for her birthday, whatever it is. We'll have some fun. All right, let's go ahead and check out the Bitcoin charts here, bros. But before we do, let me know 2 things that you're grateful for. I'm not going to ask you this every day because it will get exhausting at some point probably, but let me know 2 things. We did this yesterday. So now you got to put 2 more 20-pound weights on the barbell, and you're going to do 2 more reps of 2 more things you're grateful for. You got this, bros. I'm behind you. I'm spotting you. You got this. I've got some interesting news, and I've got some bullish news. Right now, Bitcoin is, I would say, it's really using this midline of the Bollinger Band, believe it or not, to go ahead and find some support. But it's disobeying it. So clearly there's more going on here than the midline of the Bollinger Band. But that 20-day moving average is significant here, and that is bringing Bitcoin's price level to kind of average out right around 63,500, which is not a bad place to park the boat, in my opinion. Why? Because it's right at the midline of the Bollinger Band, right? And it is really poised to go ahead and complete this breakout. Right now, what we would have liked to have seen was after this red candle, right, which you could also draw it like this. After this red candle, we have a big explosion. But right now, there's been kind of this delay, this failure to launch. But as long as we're on the right side and we're printing daily candles on the right side, meaning the north side of this downtrending line of what is support now, then we're Gucci. We're good to go, right? Because eventually this will go ahead and move to the upside, and it might be very slowly. It might be slowly, but I'm guessing it will be sideways and up for some more time, and then all of a sudden we'll get a headline that supply shock is starting to kind of take, and we will have a story today that kind of reaches that's actually our next story, but that supply shock is starting to take hold, and then we will see price go ahead and move to the upside, hitting new all-time high, and then the questions will be how high do we go, right? But right now we're still back at 63,005, and we're not asking that question, right? We're asking the question, when will we launch? When will we break out of this sideways slump that we've been in? Basically, kind of ranging here from the high 70s, the all-time highs, all the way down here from the 56.5 level. And I would say it's not a sideways range. It's a downsloping, downtrending wedge, right? But we've broken out of it. We've broken out of it to the downside and now to the upside. So it's just a waiting game here, bros. If you're new to crypto, if you're new to investing in general, this is very common. We just have to be patient. Yes, we just had a textbook pattern breakout to the upside of a descending wedge, which is a bullish pattern. It should break out to the upside. It did break out to the upside, but the breakout's legs haven't showed up to the party. So we're still here. We are at risk of putting in a lower high here, I would say, especially after a lower low. It's not what we want to see. If we were to just completely ignore the wedge and kind of delete those lines, you'd see just a continued, price movement downward, the potential for this to round off and come back into the descending wedge. Obviously not what we'd want to see if our bags are packed. It's exactly what we want to see if we've got some more dry powder to deploy into Bitcoin. Let's go down to the 4-hour and see what we can't pull out. But before we do, let's check out some oscillators. Now you might be wondering, well, T-Shroom, what is this blue line here? This is the platinum pocket of the Fibonacci trend extension, and this is the golden pocket, right? This is the golden pocket, and then this level here, 64.8. This is a multi-month level. This goes back to the bull market. April 2021 was the wick high for this level here. We were not able to print above this. This is kind of the next level of resistance. In my opinion, once we can get up and print above that, that's even more bullish. I think we'll have a lot of investors kind of rotating back into the market, and that will, fulfill the prophecy of price move up. That's how markets work. Right now, investors are sitting here thinking, yeah, we broke out of this downtrending line of support or of resistance and flipped into support. Very nice. Applause, right? However, what if we just break back down? Then I can buy it lower. So that's kind of what the patience is. That's what the waiting game is. It's really just buyers wanting to pack their bags at the lowest price possible. That's what you want to do too, right? We all have the same interests. All right, let's look at these oscillators here. The Lux Algo oscillator matrix saying we are bullish, right? On the daily at least. Got money flow coming in green. Got the hyperwave getting back up above 50. This is bullish. This is about as bullish as you can get considering what we've just experienced here. Big tank. Big sell-off. All right? So it's a nice recovery. On the MACD, you can see that we've got our third green histograms here and a nice rounding out of the MACD lines with a bull cross, I will add. Yes, we've got a nice bull cross that's playing out here on the daily with those MACD lines. All right, let's go ahead on down to the 4-hour. Now, when we go to the 4-hour, each bar is representing 4 hours of trading data versus the daily chart is representing 24 hours of trading data. Okay, so we're going down to the 4 hours. This is a lower time frame for those watching at home who have not looked at charts very much. Now, I've got a lot of indicators pulled up. Experts will be able to discern, what the differences are. I'll bring the Bollinger Bands back here in just a second. I'll bring those Bollinger Bands back here in just a second, bros. But you can see a little bit higher definition, higher resolution here of the retest that we got here. So we have one retest that was pretty good, and then another retest that was much more textbook, wick down lower. Right, we've got a lower high here, both on the candle body prints, right here, lower high, and also on the wicks, lower high, right? So it's just, for me, it's consolidation. And you could even say that we're getting into a little bit of a pennant, potentially a pennant formation here. I'm going to keep these lines green. Boom. And boom. You could make that argument here in the 4 hour that we could see a pennant breakout. Yeah, so that's a nice little 4 hour TA to pull out. So what is this? Pennants are not like descending wedges because they're triangles. These are neutral from what I've seen. These are about 50-50 that they'll break out to the upside or the downside. Obviously, given the fact that we've just broken out of a descending wedge, a very large one, a multi-month wedge, it's more likely that we'll break out to the upside. But it's not like a descending wedge where it's basically a flag pattern. All right, let's take a look on the 4 hour at the MAC. Ooh, that's not the MACD, and neither is this. This is the Lux Algo oscillator matrix here on the 4 hour. We got a nice little reversal dot there. What does that mean? It means that momentum, which is what oscillators measure, momentum is coming back in favor of the bulls. Now we're still below that 50 line on the 4 hour. We want to see that get back up above the 50 line like it did on the daily. But the money flow looks nice and healthy, green, momentum to the upside. That's good. That's good to see. All right. So that is pretty plain to see after a reversal here that coincided with basically sideways movement in the Lux Algo oscillator. Because why does it do that? Well, because after this huge move higher, and by huge, it's pretty huge for the 4 hour, then we went sideways. So that's why you saw this this reversal delta print here, because it was a slowdown. Even though the price didn't come down, it was a slowdown in momentum. That's how these oscillators work. Hopefully that unlocked some knowledge for you right there. If you all want to hear, if you're wondering, T-Shroom, how do you know so much about technical analysis? Well, a lot of what I learned is from this man right here, Army Piper. He's saying, "Good morning, bros." His show will be going live here in just 6 minutes, which reminds me that I've got to move on to the stories here. You guys can go watch him. He'll be going much more in-depth to the charts. Just to wrap up the 4 hour analysis here of Bitcoin, our red histograms in the 4 hour are starting to plateau, and though the MACD lines are still pointing downward. So this would be the most bearish indicator that I've seen on the 4 hours, that the MACD lines are still pointing downward. But pretty much everything else is neutral to bullish. Okay. Oh, T-Shroom, we got to get that Bollinger Bands. Yep. And look how significant the Bollinger Band is, right? Not a candlestick printed above there since, not a whole one printed above since the 6th of May, which was just yesterday, right? But this would have been 8 a.m., I believe. 8 a.m., yes. So not since this time yesterday did we get a print above the midline of the Bollinger Band. A print above that would probably lead to, again, bulls being exuberant, FOMO coming in. Ooh, it's not going to go lower than this. I better buy now. This will be the lowest I can get it. And then boom, that'll just keep cascading higher and higher and higher, is the theory at least. We'll see if that ends up happening. Let's get into some bullish news here, bros. Woo blockchain, according to SoSo Value, total net inflows into Bitcoin spot ETFs on May 6th were 217 million. Grayscale ETF GBTC saw a single day net inflow of 3.9 million. Fidelity ETF FBTC had a single day net inflow of 99 million. And ARK Invest saw 75 million. That's according to SoSo Value. We use this one a lot. If you guys, it's free to be able to track the ETF flows. I believe there's a day delay, or this one is real time, but there's always a day delay because the ETFs are not compelled to release and publicize their trade data until the end of the day, which I think is 6 p.m. Eastern Standard Time. So we got that print, and it was a bullish one from the 5th. So there is a delay still. But this is bullish because this is a high print. And what's important about this is that all of the ETFs were positive, net positive. So that's very, very good. Very good. That's a sign of bullishness that across the board, the spot Bitcoin ETFs were bullish. Usually, and we're being bought. Usually, you have Grayscale who's sitting there. All the other ETFs are getting bought, and Grayscale is selling, is dumping, right? Because of that fee, people wanting to get out of that fee, higher fee ETF. Yes, it has been a fiasco. If you're just joining, you don't understand what that is, but you hear higher fee, you know what that means. It has been a fiasco. But here we are. And now all the ETFs are in lockstep to the upside. The question now is, how much longer will this resume? How much longer will we have net inflows? And the longer we do, the more likely that investors are going to think to themselves, man, I got to get exposure to this whole Bitcoin thing sooner rather than later, which is what we want. All right. Now, Dave D said he's loading up with cash for a large correction he anticipates. I don't know if you're talking about me. I'm not. But you're probably talking about maybe potentially another influencer. I'm not sitting here watching the chat because I'm doing the show. Oh, he's talking about Warren Buffett. Why did Warren Buffett sell the Apple stock? Well, I mean, if you look at Apple's performance, it hasn't been great. But apparently they sold and disclosed that they sold for tax reasons. Kyle Field said, I love how history repeats itself and we're bartering with cats and dogs and birds again. Yes, that is the meme coin world, I believe, that is being referred to there by Kyle Fields. Redman, I think because he was in so early and just diversifying, maybe Charlie wanted to hold onto it and he waited to make that move. Yeah. I think it's a bit of a mystery. I think it's just a bit of a mystery why they sold Apple, you know. I think, though, that if you look at the leadership of Tim Cook, and you look, I mean, the most impressive thing that they've had in the last 5 years has been the Apple Vision Pros, right? Does anybody really care that the iPhone has like a wider lens? I don't know. But you're not here to learn about Apple. Let's get back into the crypto. Willie Woo, one of my favorite analysts, on-chain analysts, says, never has there been such a buying spree by high net worth Bitcoin holders as has happened in the last 2 months, with Bitcoin ranging between 60 and 70K. So this should be welcome words to those of you who are newer to the space. Maybe this is your first Bitcoin bull run, and you're sitting there thinking, when Lambo? When am I going to be rich? What the heck? Well, first of all, your goal really shouldn't be rich, right? It should be to increase your wealth, to perpetuate your wealth, and to experience some life-changing growth here in your investment account. But being rich should never be the goal. Being wealthy should be the goal. There's an important difference. Research for yourself what that is. These are guys holding between 100 and 1,000 Bitcoin, or roughly 6.5 to 70 to 65 million dollars in Bitcoin. So a lot, way more than you or I have, likely, unless you have a lot more money than you're letting on here in the chat. And maybe that is you. Maybe you never chat. You're just one of the millions of people that watch the channel, but that do not chat. That's okay, because you're one of these people that bought. Now, what Willie also provides here is a longer-term view that's really nice to see, because you can see here, this line, this bit of data over the last 2 months, it does. You do not see orange, which is wallets that have a account balance 100 to 1,000, right? Whales, people with a lot of money, a lot of Bitcoin, or they bought very early. You really haven't seen that in the last, really since back here in late 2012, right? It was pretty aggressive back here, the buying, right? But really, bulls have been loading up. Wealthy bulls have been loading up on Bitcoin. It is absolutely no joke. This thing is about to absolutely explode when the supply shock comes into play. According to history, that is what is likely to happen. All right, a couple more headlines here. Elon Musk says, I recommend investing in Argentina after meeting with President Javier Milei. I would love to hear that interview. I don't know if it was recorded or if it was an interview or they just had a tickle fight. I'm not sure what happened with that meeting, but this was the conclusion. Invest in Argentina. I assume that's bonds. I assume that's, but maybe their stock market. Not exactly sure. All right, and then we've got one more thought here from Crypto Rover. He said 18 days. The spot ETF for Ethereum deadline is here. Will it get accepted? We shall see. We shall see. I think, unfortunately, my prediction is that it will not be accepted and that there will be volatility in the markets. But I didn't buy Ethereum in anticipation of it getting an ETF. I purchased Ethereum long before an Ethereum spot ETF was even a twinkle in its father's eye, right? And I'm not going to sell it if we don't get it, right? Because A, we eventually probably will get it, the Ethereum spot ETF, and B, again, I have Ethereum because I believe it's a innovative new technology. Full stop, right? And it's a currency of the future if it continues to do at least as good as it has done, if not better, in terms of gas fees and speed and scalability. But are there other better blockchains? There are very few other better adopted blockchains, and that is undeniable. The only better is Bitcoin. All right, bros. Thank you so much for tuning in today. It is 9:33. Go ahead on over and check out the Piper Academy, where they'll be going much deeper on the charts. I have been T. Shroom, and I will continue to be T. Shroom. If you're trading today, keep those stop losses tight. And for yourself and for your family, stay hydrated. And let me know in the comments, what are 2 things that you're grateful for in your life that's more for you than it is for me? Trust me. Adios. We'll see you at 3 p.m. Eastern Standard Time today. We've got Caleb Franzen coming on. We're going to be breaking down some macro, probably talking about these bank failures as well. We'd love to see you there. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shouted out loud on the PA. T-Shroom's news, catch a word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.